A lot more movers to talk about this morning, and not all of them are positive, like Alphabet and AMD. PayPal is down by 20%, and that's after the company said that growth continues to be somewhat lackluster. We saw in the fourth quarter total payments volume was higher. It was higher by 23%, but it was the smallest increase in 2 years. It was also short of estimates, as you see there. The company's earnings per share in particular also short of estimates. And part of this has to do with eBay continuing to migrate away from PayPal. Part of it has to do with the pandemic bump that they got kind of fading away, Saz. But anyway, you slice it here, it's a pretty negative outlook.
Yeah, let me just Venmo you my comments on this one, Julie. Two things I think why you're seeing the shares is absolutely slaughtered. One, slowing growth. That has been a theme over at PayPal the past few quarters. Next up, their outlook. For this year, PayPal only expecting 15 to 20 million net account adds. Well, the street was looking for 55 to 60 million. Whether that's a company just coming up on large numbers versus last year, more competitive environment, doesn't matter in the mind of the markets. And there you have the opening bell.
Yep, indeed. There you have the opening bell. But what else were you talking about when it comes to PayPal, Saz?
Yeah, well, I was just going to say, Julie, the market doesn't necessarily care why these things are happening per se. The fact is that they are in fact happening. Slowing growth over here at PayPal. Disappointing outlook. The stock is still trading at a rich price to earnings multiple. It was just toiling around on Yahoo Finance Plus a little bit. 30 times forward earnings for PayPal. So still an expensive stock, a stock that is priced for strong growth, and you're just not going to get it this year.
No, you're definitely not. I mean, a couple of the other things that the company said in terms of its outlook, it had been targeting a total of 750 million active accounts by 2025. And the company's been spending more to try and get people in. But now PayPal's saying it's not going to make that number. In part, I mean, take a look at this. It uncovered 4.5 million accounts it says were illegitimately created. So that's a setback. And now it says it's going to add 15 to 20 million net new active accounts this year. Mm-hmm. It added 49 million in 2021. So in terms of that new customer and new account acquisition, that's another area of disappointment.
Julie, let me just hop in real quick. Just to underscore, this is a shocking decline in PayPal, over 20%. This is not what you normally have seen historically by PayPal on its earnings days. You zoom out a little bit here, PayPal shares are up 355%, or about 355% over the past 5 years. So it has been a consistently strong performer, consistently strong grower, a lot of quarters of coming out here and beating on sales, beating on revenues, but this is a market signaling that the next 12 to 24 months will be a lot different for PayPal in terms of growth compared to the past 2 years.
Yeah, and we've gotten some hints of that, but this is the most fully fledged situation that we've gotten, realization that we've gotten of that. Starbucks, here's another one for you, Saz. This company coming out with fiscal first quarter numbers that missed estimates on the bottom line, operating margin also missing. This even as the number of transactions and the average check size were higher in North America. The company raised prices. It's going to keep raising prices, but it cut its full year earnings per share growth forecast. Now it says earnings per share for the year will be down 4 to 6%. It previously had predicted just a 4% drop, cut its operating margin forecast also. So I know you wrote a little bit about the price situation at Starbucks. It's not enough to help it, though.
You're just tossing me this red meat this morning, Julie, with these worse than expected reports. You're just giving me the meat to just devour like a bear. But nonetheless, disappointing quarter from Starbucks. They raised prices on October 1st. They revealed in the earnings call. They raised prices on January 1st. You know what? None of it matters. The company is seeing a structural increase in hourly wages. And our very own Brooke DePalma has a deeper dive on Starbucks earnings now on Yahoo Finance, just looking at the higher wages that Starbucks is in fact paying here. This is a major problem for Starbucks and a lot of other restaurant players here. Now, Starbucks will come out here and continue to raise prices like they signaled on the earnings call last night. The market still is worried if that will be enough to help improve their operating margin. Starbucks on their conference call warned on sales. They warned on earnings here, and you're seeing the market here reset a little bit. And I'm surprised, Julie. I'm surprised we're not seeing a bigger drop here in Starbucks, just given the tone of the call and the company's outlook. And to your point, yes, I also have a story on Yahoo Finance looking right now at how much prices could be going up at Starbucks very, very soon.
Well, I've got a 3-for for you, Brian Sazi.
Now my coffee's going to cost about $10. You know, I can't take it anymore. I'm going to start making my own stuff at home.
Yeah, well, brace yourself, because obviously gas prices have been going up too. Let's talk General Motors for a moment, shall we? The company coming out also missing estimates on the top line in this case, earnings per share beating estimates, and the company says its production is going to go up 25% in the first quarter, should be around 30% for the full year, but that's coming as they are sort of shifting the production mix. So General Motors, like a lot of the other car makers, has been trying to shift to higher margin vehicles. As it's had trouble getting chips, it's prioritized producing those higher margin vehicles. It sounds like that is going to change to some extent in 2022. The shift is going to go back towards perhaps those lower margin vehicles. And the company says this year's earnings per share are going to be roughly in line with 2021. All of that said, the shares are not changing much this morning.
There's something here with GM, Julie, that I can't put my fingers on. There's just a lack of sizzle. A week ago, they said they are going to invest $7 billion more to build out EV capacity. Great. On the call yesterday, GM's CEO Mary Barra said, hey, we have 110,000 reservations for a new Chevy electric pickup truck. Really a bit of a snooze here. Look at this market reaction. Look at this compared to what we have seen from Ford. Every time Ford has come out, teased new electric vehicles, teased new electric vehicle capacity. Ford CEO Jim Farley told us last week, hey, Brian, we have over 200,000 reservations for our F-150 Lightning electric vehicle. The market just embraces or is embracing Ford more now compared to what General Motors is. Now, it was a good quarter from General Motors. I like what they said on the supply chain, perhaps those bottlenecks easing this year, but still, this is a market that likes Ford over General Motors. And if you're a General Motors, I'm not so sure what else you could do here to regain that narrative versus your crosstown rival.
That one-year chart really tells the story with the two stocks that we just put up. And Ford, of course, also there was a report yesterday that they're going to spend another $20 billion on electric vehicles this year.
Look at that. The stock is flatlined, Julie. Look at General Motors right there. I mean, that is a stock that is barely alive. Where's the pulse? Let's get the defibrillator on it. General Motors is doing nothing there.
Yeah, and it's interesting because the analyst commentary and reaction to the numbers, fairly positive. There were some areas of strength. International was relatively strong. GM Financial was relatively strong, but maybe it's that lack of sizzle that you were referring to.